Howdy, y'all. Happy Hump Day. It is Wednesday, May 31st, 2023 here. Hope everyone's having a fantastical day. It's a little overcast here in Colorado, but we'll take it. It's not too warm, not too cold, and it looks like we're going to get a little more rain, which I don't think we need anymore. I mean, I know the doomers and gloomers are always like, oh my God, we're in a drought here in Colorado. We're all going to die. No, we're not. We're going to be fine. So some years are drier than others, but that's just the way it is. And we've gotten a ton of rain and a ton of snow this year already. So I think we're good. Anyways, if it's your first time watching a Liberty Call, I am glad you're here. Thank you very much. We're going to cover what happened in the markets today. There's some labor data and a little quiz about Social Security. So interesting stuff that I've managed to gather for today's broadcast. And if it's your first time watching Liberty Call, again, thank you. I'm glad you're here. Give me some thumbs up, likes, shares, subscribes. See that big old scratch on my thumb or my middle finger here? I won't give you the finger. It'd be rude. Yeah, we were doing yard work over the holiday weekend, and we're carrying logs and stuff out to the street so that the slash pick up when they come by, and I scratched up my finger real good. Anyways, all right, let's go ahead and jump into the numbers. Dow Jones today was down 0.41%, 134 points, closed at 32,908. SP 500 was down 0.61%, closed at 41,79. NASDAQ was down 0.63%, closed at 12,935. The VIX was up 2.75%, closed at 1794. Canada was down 0.85%. Brazil was down 0.58%. And Mexico was down 1.1%. Over in Europe, Germany was down 1.54%. The UK was down 1.01%. France was down 1.54%. Netherlands down 1.03%. Spain down 1.28%. Italy down 1.97%. Switzerland down 0.57%. And Portugal down 1.11%. Russian exchanges both in the green today. The MOEX up 0.7%. RTSI up 0.75%. And the overnights in Asia, see nothing but red. The Nikkei in Japan was down 1.41%. Australia down 1.65%. New Zealand down 0.55%. In China, the Shanghai was down 0.61%. The Shenzhen component down 0.7%. China A50 down 1.72%. DJ Shanghai down 0.68%. Hang Seng down 1.94%. And the Taiwan weighted down 0.26% for the day. So, everybody's just kind of sitting on pins and needles. I guess what they're really waiting on is to see if the Congress is going to approve that debt deal that was, agreed to, and I'm putting that in quotes, over the weekend. So I know the Freedom Caucus, I've seen some headlines going across my screen today and on the TV that the Freedom Caucus is considering voting against it, which I don't care. I mean, seriously, let it all collapse. It'd be better for us in the end. But, I'm sure there's people out there like, oh, my God, what would I do without my federal government to tell me what to do and give me freebies and all that good stuff? I mean, if that's how you vote, you're not a good person. All right. Let's go ahead and jump into today's market recap. Wall Street falls as labor data spurs rate hike jitters before debt ceiling vote. Yeah, and that's another thing. Everybody's like begging, oh, please do not raise rates on when's the next meeting? The next Fed meeting is June 13th, so about 2 weeks from now. So everybody, oh, please don't raise rates. All right. On Wednesday, U.S. stocks experienced a decline as investors awaited a crucial vote in Congress regarding a deal to raise the federal debt ceiling. Concurrently, unexpectedly strong labor market data initially increased the likelihood of another interest rate hike by the Federal Reserve. The House of Representatives was expected to vote in the evening on a bill to lift the $31.4 trillion debt limit. I think they're not even really lifting it. They're just pausing the debt limit for a year. Because I've read some conflicting articles on this. A critical step to prevent a destabilizing default that could occur as early as next week without congressional action. If the bill passes in the House, it would then proceed to the Senate, where discussions might extend until the weekend, just days before the government potentially runs out of funds. Oh, my Lord, we're all going to starve. However, most analysts anticipate the bill's approval. Yeah, that's the way it always is. I mean, it's like, hurry up and wait, hurry up and wait, hurry up and wait. And then, you finally get there and they wait till the last minute. It's all this panic. And then, it goes through. I mean, they did this back in 2012. U.S. President Joe Brandon expressed his expectation that the debt ceiling bill would reach his desk by June 5th. Market sentiment was generally positive as the bond market responded favorably to the prospect of fiscal discipline. That's funny. Fiscal discipline. Really? You're very disciplined to have $31 trillion in debt. And the equity market appreciated the expectation that the bill would not harm economic growth. Brad Conger, Deputy Chief Investment Officer at Hurdle Callahan and Co., noted that the outcome was viewed as positive, although equity valuations remained stretched given high interest rates, a slow economy, and the need for further inflation decline. The Labor Department's Job Openings and Labor Turnover Survey report for April revealed an unexpected increase in job openings, indicating ongoing strength in the labor market and suggesting potential upward pressure on wages and inflation. Futures traders initially raised the probability of a 25 basis point interest rate hike at the Fed's June policy meeting to 70%. However, this likelihood declined to about 25% after comments from Fed officials hinting at a possible hawkish pause. I'm not sure how you're hawkishly pausing, but okay. The closely watched May unemployment report from the Labor Department, scheduled for release on Friday, could have a decisive impact on the potential for a rate hike. Following the comments by Fed officials, the major indices pared some of their losses. The technology sector led gains, with the Nasdaq on track for its best May performance since 2020, up 5.7%. In contrast, the SP 500 was set to end the month flat, while the Dow has dropped about 3.8%. The SP 500 Financial Sector Index fell 1.4%, and banks declined by 2.4%. Advanced Auto Parts, Inc. experienced the largest drop in the SP 500, plunging 34.3% after the auto parts retailer lowered its full-year forecast. Shares of other auto parts companies, including Genuine Auto Parts, AutoZone, and O'Reilly Automotive, also declined. Hewlett-Packard slipped 6.1% after missing Wall Street estimates for second quarter revenue. NVIDIA shares fell 3.8% a day after reaching a record high when its market valuation briefly surpassed $1 trillion. I remember a few years ago, everyone was thinking that Apple might be the first $1 trillion company. So it's NVIDIA. People make chips, and not the good kind that you can eat. Driven by optimism surrounding the AI industry. Declining issues outnumbered advancers on the New York Stock Exchange and NASDAQ. The SP 500 posted 3 new 52-week highs and 22 new lows, while the NASDAQ composite recorded 28 new highs and 155 new lows. All right, so that's everything going on Wall Street today. Let's dive a little deeper on the labor data. Job openings increased to 10.1 million in April, per the Labor Department. In April, job openings in the United States increased, breaking a 3-month streak of declines, which could indicate persistent tightness in the labor market and have implications for the Federal Reserve efforts to combat elevated inflation. Oh my God, when did this happen? According to the Labor Department's monthly job openings and labor turnover survey, or the JOLTS report, there were 10.1 million job vacancies on the final day of April. This figure is higher than the upwardly revised mark of 9.75 million in March and surpasses the forecasted 9.78 million. In contrast, layoffs and discharges decreased by 264,000 to 1.6 million, bringing the rate relative to the broader workforce down to 1% from 1.2% the previous month. Kathy Jones, chief fixed income strategist at Charles Schwab, commented in a tweet that these numbers indicate a healthy job market. While the JOLTS data lags behind the influential non-farm payrolls report by a month, it remains a crucial factor for the Federal Reserve officials as they assess the trajectory of price growth. The central bank has considered a softening in the labor market as a key element in its sustained campaign of aggressive interest rate hikes. Currently, the Fed funds rate stands between 5 and 5.25, a significant increase from the near zero levels in March of 2022. The job openings report suggests that despite challenges posed by the pandemic, the labor market continues to show resilience and strength. It indicates that there is still demand for workers and highlights the ongoing tightness in the job market. This data, along with other employment indicators, will likely influence the Federal Reserve's decision on monetary policy and interest rates as they seek to manage inflationary pressures and maintain economic stability. Well, if they wanted economic stability, maybe you shouldn't print $5 or $6 trillion all in one shot and dump it into the economy. I don't know. I mean, I'm no Austrian economist. I don't study this stuff in depth. I read books and listen to really smart people. But, come on. It doesn't take a genius to figure this stuff out. All right, one last article here. Can you pass this Social Security quiz? Nearly 7 in 10 people struggle with these basic questions. So I'm going to scroll down. I'm going to skip the fluff here in the middle. But let's go to these questions here. And let me bring up the answers so I don't sound stupid. All right. This comes from 2023 Mass Mutual Social Security Retirement Benefits Quiz. And these are true or false. So in most cases, if you take benefits before my full retirement age, they will be reduced for early filing. That is true. So if you take your benefits before you reach full retirement age, so the old farts, it was 65, then it moved to like 66, and then for people my age, it's 67. Not that I expect Social Security to be there. Number 2, if I am receiving benefits before my full retirement age and continue to work, my benefits might be reduced based on how much I make. That's also true. If you take benefits before, say you start taking it at 62 and your full retirement age is 67, there's an income amount that if you go over a certain amount of income, and it's pretty low, that your Social Security benefits will be taxable. If I have a spouse, he or she can receive benefits from my record, even if he or she has no individual earnings history. That is also true. Your spouse can, I think, take 50%, can get a 50% benefit based upon the other person. Number 4, generally, if I'm in a same-sex marriage, there are different eligibility requirements when it comes to Social Security retirement benefits. That is false. I don't know much about that, so I'm going to move forward. Number 5, if I have a spouse and he or she passes away, I will receive both my full benefit and my deceased spouse full benefit. That's false. You can only collect one. Now you can, if your spousal benefit would be higher than your personal benefit, you could take your spousal benefit. So, but again, talk to a Social Security analyst. They can give you all the details there. All righty. Number 6, the money that comes out of my paycheck for Social Security goes into a specific account for me and remains there, earning interest until I begin to receive Social Security benefits. That's false too. Yeah, they don't save your money anywhere. It just goes into the general fund, which, back years ago, they took those dollars and turned them into, traded them, swapped them for securities, basically treasuries. And so now there's treasuries sitting there, but the treasury is only worth if the U.S. government can pay it back. So, all right, if I get divorced, I might be able to collect Social Security benefits based upon my ex-spouse's Social Security earnings history. Where was that? 8. Yes, that is true. Oh, I missed one. Number 7. If I file for retirement benefits and have dependent children aged 18 or younger, they also may qualify for benefits. That is true also. All right. Number 9. Under current law, Social Security benefits could be reduced by 20% or more for everyone by 2035. That is true. All right. Number 10. Under current, Under current Social Security law, full retirement age is 65, no matter when you were born. Remember, we talked about this just a minute ago. It's graduated based upon what the year you're born. That is false. Number 11, if I delay taking Social Security past the age of 70, I will continue to get delayed retirement credit increases each year I wait. Nope, that is false also. Your benefits cap out at age 70, so you might as well start taking it at that point because you don't get any benefit for postponing it any further. Number 12, Social Security retirement benefits are subject to income tax, just like withdrawals from a traditional IRA account. That is false also. Remember, we talked a minute ago. Your benefits are only taxable if you start taking benefits before full retirement age, and then it's based upon a matrix of how much you make and blah, blah, blah. All right, and lastly, I must be a U.S. citizen to collect Social Security retirement benefits. That is false also. You can be a resident or a non-citizen resident and collect benefits also. All right, well, that was everything there for that little quiz. So you're welcome to pass that along to your friends. There's a link in the article that takes you to the answers, and they're also at the bottom of the article too. So, all right, well, that's everything I had for today. If anyone needs anything from me, some help figuring out if you're actually going to get Social Security or, like me, you got a plan for other things, feel free to go to dsafinancialgroup.com. All my contact information is there. I hope you have a wonderful evening, and I'll talk to you next time. Adios.